John Higgins, Mortgage One. Happy Monday. So this is Fed Week, and a lot of things have changed over the last couple weeks. We discussed a little bit about some of the banking issues and what that was doing to the rate environment. We had another big bank, a money center bank out of Switzerland, Credit Suisse. They were bought out by their biggest competitor on the brink of failure this past weekend. And it's kind of changed the whole conversation on where the Fed is actually going to move rates. If we go back just a couple weeks ago, coming off some of those hotter inflation numbers and certainly the great jobs numbers that have been posted, 50 basis points was baked in on this meeting as far as a rate increase. And now I was looking at some numbers this morning. There's a 25% chance that the Fed makes no move in rates. So everything has changed. When there is a calamity in the banking industry, certainly the Fed takes notice, and pushing rates higher is causing some of these problems with the banks. So a lot of prognosticators out there and pundits are saying that we're going to get a much smaller increase than was expected. So, that's been great for our mortgage interest rates. We've seen the 10-year Treasury break below 350. We were just above 4% not too long ago. Seems like maybe 2-3 weeks ago. So that's had a great impact on mortgage interest rates. And as we head into the spring selling season, that's super news. It'll be interesting to see what the Fed has to say this week. So certainly, tune in for Chairman Powell's comments about where he sees things. But based on everything that we're reading out there, it looks like the Fed is going to be slowing and maybe even stopping sooner than we expected coming off those hot numbers. As we head into the spring selling season, we need to get listings, and lower interest rates, I think, will have some impact on that, and we might see a little bit of improvement as people look at rates not going considerably higher and maybe put their house up for sale. When we look at the overall rate structure, we're still near our top. We're coming off 7% again, heading back into the mid sixes. So, good news on the rate front. We do believe that rates have put in a peak. Things can always change. Strange things happen in the world, kind of like all these bank failures. But, right now it looks like as we're heading into the spring, rates are certainly headed in the right direction and much better than they were just maybe 45 days or so ago. So have a great week. Check back next week to see what the Fed had to say. We'll see you next week.